Hey traders, welcome back to the channel. In this video, we're going to talk about AMC Entertainment, ticker symbol AMC. And as we saw last week, the fun is getting started here. An absolutely incredible move, one that we've seen coming for, the last few weeks, if not the last few months. But now the rest of the world is starting to catch on. So we're going to break down first of all, our bullish thesis, why this squeeze is well deserved for AMC. Then we're going to take a look at the squeeze itself, seeing, what it's going to take for the squeeze to happen, whether it's already happened. We're going to break down all the confusion there. And finally, we're going to take a look at the chart, breaking down key indicators and key levels so we best know how to play this stock in the coming week. Okay, so really quickly before we get started, I just want to thank everybody for the support so far. We did break over 100 subscribers last week, which means tomorrow I will be doing a full market live stream where I answer any questions you guys have. I break down charts that you're playing, and I also show you guys my process for day trading. I'm super excited about it, so make sure to tune in. And if you haven't subscribed to the channel, make sure to do that. We are just getting started here, but without wasting any more time, let's get started. So we're going to start off by talking about the bullish thesis for AMC. Obviously, a bullish thesis is very important for a stock to squeeze. And I want to direct everybody's attention to Tom Nash in his most recent video on AMC. He's been in this game for a long time, releases some amazing videos, and he objectively breaks down what's going down in AMC in his most recent video, breaking down the bullish thesis. And he got part of it right, okay? He talks about the bullish thesis being that AMC is a reopening play. People want to go back to the movie theaters, and right now we are getting COVID under control, which is allowing people to go back to the movie theaters. We have around 67% of US adults vaccinated currently, and we also are seeing that COVID restrictions are being lifted off, and many, many more people are getting back out into public, which is going to be good for AMC. However, there's one factor that Mr. Nash does not consider in his video, and that is simply the power of the apes. That's part of my bullish thesis for this stock. Okay, under my estimates, since the start of the year, we've had 1 million to 5 million retail investors getting heavily invested with the stock, making a good amount of money, and once again, showing the world why they love the movies with AMC. And as a result, I believe that AMC has gained 1 million to 5 million extremely loyal customers in the future with this whole movement taking place. And on average, these customers are going to spend between $100 to $300 a year. Okay. These estimates go from conservative to aggressive. So what does that do for AMC's bottom line? Well, if we multiply the amount of people times the amount of money they're going to bring in, that's going to lead to an increased revenue for AMC between $100 million and $1.5 billion moving forward. This movement may have saved AMC completely, not just by giving them the capital they need to stay afloat, but by creating a future profit margin with the amount of excitement and attachment that the apes have to this stock. So that's another key part of the bullish thesis that Tom Nash doesn't cover, but still check out his video because he's going to explain the rest of it and break it down in detail. But now let's start talking about the squeeze, starting off with just this past week's impact. Okay, I don't believe the squeeze has actually started yet, but nevertheless, the power of the apes is starting to be felt by short sellers and by the institutions, specifically pointing out that investors shorting the meme stock AMC Entertainment are estimated to have lost $1.2 billion over the last week as we saw AMC rally over 100%, and it is continuing to defy all Wall Street analyst predictions. Specifically taking a look at a Forbes article that's going over Ehor's analysis of the short squeeze, we see that this squeeze is nowhere near happening, as Ehor estimates that 89.6 million shares are still being shorted. And taking a look at the chart, you can see that despite this massive move up over the last week, the amount of shorted shares is still remaining somewhat similar. And taking a look at Fintel is just going to confirm there's only 500,000 shares available to short. Meanwhile, 90 million continues to be shorted. The hedges are doubling down on their bets that the AMC squeeze won't happen. And as a result, they are leaving themselves extremely exposed heading into next week. Okay, so speaking of next week, let's make sure we are fully prepared by breaking down this chart, starting off by just recapping last week's price action. We saw this crazy move happen. We started down here in the $12 to $13 range, broke above that, and then we were not turning back. We made a move up all the way to highs of $36 on Friday morning before finally having some much needed consolidation, closing at 26.12, still up over 100% from the start of the week. That is not something you see very often, but like we've already mentioned, we are just getting started here. So now taking a look at the indicators, starting off with the VWAP. So normally the VWAP tells us whether we're in bullish or bearish territory heading into the next trading session. So right now, technically speaking, we closed under VWAP, meaning that this is bearish heading into tomorrow's trading session. However, right now, I don't believe that's how we should be using the VWAP, just given all the external factors in play here with the hype, with the FOMO, with the squeeze potential. This is not going to tell you what's going to happen tomorrow. If anything, this should be used as an intraday support and resistance level. So I wanted to point that out. And I also want to point out that we're not going to talk about moving averages in this video because normally we go over them to determine whether we're in bullish or bearish territory. But after this crazy move that AMC had in the last week, AMC is sitting so far above all of its moving averages currently. Okay, the short-term moving averages, the intermediate-term moving averages, and the long-term moving averages. And by being so far above all these levels, it means that AMC is in very bullish territory no matter what time frame you're playing this stock for. So the only other indicator to really go over, this has been one of massive interest to us over the last few weeks, is this OBV. And as you guys can see, despite the consolidation day on Friday, we are still sitting at all-time high levels. The money buying and the volume buying is still flowing into AMC as people are anticipating a next move up, a bigger move up. This is also extremely bullish. But now let's go into the key levels, taking a look at the 1-minute chart. So our first support level is going to be right here at $25. This is going to be extremely strong support for AMC. I do suspect that if we test these levels, then we're going to get a lot of volume pouring in to AMC at these levels. So keep that in mind. But if we do break under, then we also have support at $23.23 and then $21.30 and $20. So I'm not saying that it's going to happen that we test those levels, but it's always good to have them charted out. And like I always say, you want to target buys at support levels. By doing so, you minimize your risk and you maximize your upside. But now taking a look at resistance levels next week. So we're going to see the same resistance levels that we were breaking past on Thursday and Friday, starting off with one at 27, then at 28, then at 29.30, 31.60, 33.20, and this final one at $35.70 to $36. This is going to be major resistance right here because if we can get a second break over it and hold those gains, well, then that's when the squeeze is going to get started. So if we do see this break and we, make a push to 40, that's when the fireworks are going to begin. That's something you guys should be watching out for. But now let's take a look at the final piece, and that's going to be volume. And as we see, this is just mind-blowing volume right now on the chart with Thursdays and Fridays action. If you were paying attention to pre-market volume, you would have seen that billions of dollars were trading hands specifically with this stock before the market even opened. So, there is just crazy volume right now. And if we want to see that next leg up, expect this to continue. Now, if we do see a drawback where we maybe go back into the 100 million volume range, expect to see maybe a little bit more consolidation before that next move up comes. But pay attention to the volume. It's very indicative of what's going to happen with the price action. And let me know what you think is going to happen next week. Are we going to make that next leg up and start squeezing this stock, or is there going to be some more consolidation ahead? I'm always interested in your feedback and opinions. If you had any questions, let me know. I'm always happy to answer them. If you like this video, leave a thumbs up. If you want to see more content like this, subscribe to the channel. And aside from that, have a great rest of your night.